Hey everybody, this is Halstead and Andrew McMillan with REH CPA. Today we want to talk about the Child Independent Care Credit. So if you have a child that has to that goes to daycare or after school care, there's some potential help you can get on your tax return. I got Andrew McMillan here with me today. Andrew, what can you tell us about the Child Independent Care Credit?
So first we can talk about what expenses are going to qualify for this. So when we're talking about this credit, we're talking about expenses to take care of your kids while you and your spouse are working. It's important to remember that to qualify for this credit, if you're married, you both have to be earning an income, have earned income.
Which trips up a lot of people, because sometimes we have a stay-at-home mom or stay-at-home dad that only one spouse is working, and they're still sending the kid to a daycare or preschool, and they're trying to get the credit, and they can't because one of the spouse doesn't have earned income.
Right, so both spouses have to be having an earned income. There is a little caveat in there if you're looking for work, if you're out of work, you're looking for work, you have to pay for somebody to watch your kids, things like that. There are some ways where we can still, where you still may qualify for the credit, but at a high level, both spouses have to be working, and you have to be paying for expenses that aren't necessarily there's no education involved. Kind of like you can't, tuition for your kid to go to private school is not going to count for this credit. But what is going to count is anything pre and after school. So if you're paying for after school care for your kid, if you're paying for some pre-kindergarten or before the day starts for school.
And just general daycare throughout the day. I mean, if you have a kid that's in full-time daycare, that counts.
Yeah, full-time daycare counts, nursery school, summer camps is a big one.
Which is one that
forget.
They miss that a lot of times, or summer camps.
Summer camps, a lot of people pay for summer camps for their kids. So soccer is a really good example. If you're paying for your kid to go to a week-long soccer camp, that's going to qualify for this credit here. So the biggest thing to remember is you can't write off you can't use your tuition that you pay for your kid to go to a private school, but anything outside of school, after school, if your kids go to somewhere after school to wait for you to come be able to pick them up from work, if you have to pay for an extra piece of that, then that's going to qualify for the credit.
So how much of a credit are we looking at?
So the credit's either going to be at a rate of 20% or 35%. There's a range there, but for the vast majority of people, it's going to be a 20% rate. If you make over about $40,000 a year, you're going to be at this 20% rate. So the credit's going to be capped at, you can multiply that rate by either $3,000 of expenses if you have $3,000 of expenses for if you have one child.
One child.
If you have more than one child, two children, you're going to be capped at $6,000 in expenses. But essentially what you're doing is if you have two kids that are going and you're paying $10,000 in after school care, daycares, whatever it may be, you're only going to be able to use $6,000 of those expenses because it is capped at $6,000, but you multiply that $6,000 by your 20% rate, and that's the amount of your credit that you're going to get on your tax return.
Awesome. So we did go a little bit over who's eligible for this. Can you go into a little bit more detail, if do they both have to have W-2s, or can you have a small business owner?
So W-2s would work. You can have a small business owner. It just has to be earned income. So you're mainly talking about income where you've paid self-employment tax on it or payroll tax on it. Like W-2s, you're paying Social Security and Medicare taxes. If you are a 1099 worker, employee, you're going to be paying the self-employment tax, which is essentially those Social Security and Medicare taxes. We have a lot of S-Corp owners that we work with, small, closely held businesses of an S-Corporation. If you're not paying yourself a W-2 wage out of that S-Corporation, you could get tripped up on being able to take this credit here. So,
is there an age limit for the kids?
So there is an age limit for the kids. That's the biggest piece of all this as well. They have to be under 13 years old. So it has to be a qualifying child, a dependent on your tax return, and they have to be under the age of 13 to be able to qualify for this credit. So there are some other exceptions to that, if it's someone who's older but they're physically or mentally incapable of caring for themselves, there are some exceptions.
That's the dependent part, because they say child and dependent credit. Yeah.
But that 21-year-old who's still living at home, is perfectly capable of going out on his own. Unfortunately, he's not going to qualify. Yeah. So
no, awesome. Well, really good information, Andrew. I appreciate you going over that with everybody. If you have any questions on what the potential impact of the Child Independent Care Credit would have on your tax return, feel free to give us a call and we'll help you out. Thank you.